I recently received a request from an active subscriber. I've already answered the first portion of the request, but let me read you here the next portion of the request. It appears to me that we are already in a recession. I've been driving around the area I live, which is Danville, California, a pretty affluent area, and I have noticed for the past year a steady increase in vacancies in the local shopping centers. Each shopping center has at least 5 vacancies in a very populated, busy area. The local stores, Target, Kohl's, Walmart, are practically giving away items just to keep foot traffic in the store. The tax cut made everyone I know write a bigger tax check instead of getting money back. I feel we are already there, and the government is trying to figure out how to hide this fact to avoid a quicker slide into the recession. What are your honest thoughts? Well, this is a very timely request, as I have been looking at retail for the last 6 months. So, let's take a closer look. So this first chart here are retail bankruptcies. It's a timeline from 2015 until early 2018. And while you take a look at the timeline, let me read to you from the 2018 death list. Abercrombie & Fitch, 60 more stores are charted to close. Aerosols, only 4 of their 88 stores are definitely remaining open. BB is history, and all 168 stores have closed. Foot Locker, they're closing 110 underperforming stores. Gymboree, a whopping 350 stores will close their doors for good this year. J. Crew, they'll be closing 50 stores instead of the original 20 they had announced. J.C. Penney, they've closed 138 stores and plan to turn all the remaining ones into toy stores. The Limited, all 250 retail locations have been closed, and they're going digital in an effort to remain in business. Macy's, 7 more stores will soon close, and more than 5,000 employees will be laid off. Michael Kors, they'll close 125 stores this year. Payless, they'll be closing a whopping 800 stores this year after recently filing for bankruptcy. Radio Shack, more than 1,000 stores have been shut down this year, leaving them with only 70 stores nationwide. And then here, Sears and Kmart. They've closed over 300 locations. And that's just a partial list. Let's go to the next chart. And this table here shows the summary of U.S. store closures and openings in 2017. And 2017 was a landmark year for U.S. retail. Store closures during the year increased 229% from a year ago, with major retailers closing about 6,955 stores, which was the highest recorded rate of closures, exceeding even the annual store closure count during the global economic downturn. At the same time, U.S. major retailers announced 3,433 store openings for the year, up 50% compared to 2016. And as we can see here in the chart are the trends of 2017 by category. And the U.S. retailers are grouped into 5 main categories: soft lines, hard lines, department stores, drugstores, and grocery stores. And closures were almost entirely confined to the non-food retailers in the apparel, toys, and electronics categories. And as shown in the chart, soft-line retailers such as clothing specialist stores were impacted the most. And several of these retailers blamed the store closures on the continued emergence of online stores and fierce competition from off-price retailers. Unsurprisingly, though, department stores were also impacted, suffering from declining foot traffic, a more promotional environment, and heightened competition from e-commerce. Sears, Kmart, J.C. Penney, and Macy's felt the greatest pressure. Management of a number of these retailers stated that they are looking how to better integrate the online and offline segments and enhance operational efficiency through digitalization. Grocery stores, however, that was a bright spot in 2017. Competition from e-commerce in food retailing remains negligible, and this is important here, discount formats are growing fast. We'll talk about discount formats coming here shortly. And this here is a double chart. In the upper portion of the chart is the year-to-date major U.S. store closure announcements, and then the lower portion is the year-to-date major U.S. store opening announcements. And looking at the upper portion of the chart, the store closures indicate a total of about 1,446 announced store closures. But when taking a look at this, Walgreens, as you can see at the very top, has a total of 600 announced store closures. I believe that may be in some part a result of the acquisitions that Walgreens has been making. They've been on a heavy acquisitions path here in the last year or so. But what I also find interesting there is in the lower portion. Take a look at Dollar General. 900 announced store openings. So when you're thinking about the retail market, the stock market with regard to retailers, and you see somebody like Dollar General that's going to open 900 stores, does that indicate to you a healthy market? What it indicates to me is that consumers are gravitating toward the lower end of the retailers. Dollar General, 900 announced store openings, to me, tells me that the economy is having some issues. Let's go to the next chart. According to a recent report from UBS, tens of thousands of retail stores might have to close over the next few years to keep up with the pace of shoppers shifting from brick-and-mortar retailers to online retailing. UBS analysts examined the supply of brick-and-mortar retail locations that would be necessary to align with the demand to shop in those physical locations. What they found paints a bleak picture. Presently, e-commerce represents about 16% of total retail sales, excluding food and gas. The average household now spends about $4,600 online compared to $3,140 just 5 years ago. UBS estimates that anywhere from 30,000 to 80,000 stores would need to close to maintain low single-digit sales store growth should the e-commerce penetration reach 25% of retail sales by 2025. Again, the current estimate is 16% of retail sales is online. So that's only a 9% increase to reach 25% of retail sales by 2025. Yes, that is a pretty bleak picture. Even if you don't like to shop, this is a sign of economic trouble. The malls that sit empty are a sign of massive unemployment. Jobs in the retail sector are the most prolific in America, employing 4.3 million workers as salespeople and 3.3 million workers as cashiers. The current store closures mean the end of employment for tens of thousands of workers. All in all, the collapse of the retail industry could at some point put the livelihoods of more than 7 million people in jeopardy. Back in 2006, our urban population exceeded our rural population for the first time ever. This means that people will be unlikely to have the space to grow food for self-reliance. As well, we've gotten so far away from the skills of self-reliance that it's practically a lost art. Our society is one of consumers, not producers. And this means that in a depressed economy, many more people will be at the mercy of government handouts. And let's face it, in a depressed economy, those handouts, if they happen at all, will be very sparse. So for today, that's ChewDog Charts. Thank you.